And I always stress this with business people because I have seen businesses and business people rather shed tears because you suddenly find out that you owe this amount in taxes.
Ways in which people can try to minimize the amount of tax they pay.
The main thing, and the thing that should be every entrepreneur's best friend, holy grail, is
Hello and welcome to the Diary of a Budding Entrepreneur podcast. I'm your host, Martha Munyeki. In today's episode, I'm delighted because we have a very awesome and interesting guest. Today we'll be addressing a key topic in entrepreneurship that is a pain point for most small and medium enterprises. And today with me, I have a certified public accountant and a tax consultant who is also very passionate about business and entrepreneurship advocacy. Ladies and gentlemen, Fiona. Welcome so much to our podcast, Fiona. We've chatted so much before the podcast, so we've already warmed up.
Yes,
and broken
absolutely.
the ice. Yeah. Now you can tell us more in depth about yourself, what you do, and all that before we get into the meat of the conversation.
Okay. Yes, so as she said, my name is Fiona Witaba. I'm a tax consultant and CPA. I work with businesses, small to medium businesses. I help them establish their accounting, their books, their record keeping, their bookkeeping, make sure that everything is aligned for compliance and that they are able to take advantage of any tax incentives that are available to them so that they pay the minimum taxes possible while still being compliant to the laws and regulations of KRA. I also walk them through how to interpret their financial data and read their reports, create and read their reports so that they're able to make informed decisions. So mostly I'm passionate about businesses growing, and I always work to make sure that if there's an opportunity for an entrepreneur or a business owner to reap the maximum benefits, then they take it.
So, as you've heard, Fiona Witaba is very passionate about teaching people on tax compliance, accounting issues, and since she's an advocate for entrepreneurs, those are some of the things that we need to handle very early on in our business journey because I've realized, it's popular knowledge that compliance, tax compliance especially, is quite low in our country. Like most small and medium enterprises are not compliant. And from the information I've consumed, even from your page and from other sources, it's definitely something that can come to bite them later on in future.
For sure.
So today I want us to delve deep into the intricacies of tax compliance and accounting for businesses. Since you're an expert, you're going to take us through that. They are more of jargons, especially to small entrepreneurs, but from the information I've consumed from your page, you make them digestible to every other day entrepreneur. And normally I wouldn't have my notebook with me to ask questions, but I want to milk as much information from you, so I've come prepared with some of the questions to ask, and you're going to go through them as we go by so that I also don't miss important questions.
All right.
Yeah,
that's fine.
So first I want to understand why tax compliance is so important for small and medium enterprises.
Why it's important is because in every economy, there are laws and regulations that govern that economy. And compliance has been set in place so that there's order. So for small businesses and medium ones, compliance is mandatory so long as you're operating within the economy of Kenya. If you're operating within here, then you're creating income, you're making profit, then you should pay your fair share of what the taxman requires you to pay. Failure to do that, you'll be hit by penalties and interests. And that is it's not interesting at all. So the best thing to do is to make sure that you are aware of what is required of you and you put the measures into place to be compliant.
Wow, that's such an elaborate answer. And now looking at the perspective of the taxpayer, now the business owners, there are a lot of complaints in the market how the economy is not performing well, and now most people feel like it's an extra pinch to take part of their earnings to pay the taxman.
Yeah.
And that's why I feel there's very high tax evasion in the market. So what does the business owner stand to benefit by paying the taxes if they're able, because there are many cases of people being able maybe to evade taxes and not being caught, quote unquote.
Yeah.
So what do they stand to benefit beyond just being compliant?
Okay. So as a small business, being compliant is very important.
Yeah.
First of all, I am aware that the economy does get rough.
Yeah.
And sometimes for businesses, there are high seasons and low seasons and seasons where you don't make a thing.
Yeah.
So taxes are only levied on income, or rather on profit.
Yeah.
If you make a loss in your business over a certain period, you are not required to go ahead and pay taxes. You're required to file, but you're not required to pay. So you just declare and say that this year it was rough, I made a loss of this amount. Therefore, I am not able to pay.
Yeah.
But you must declare that loss. It's sort of like telling KRA, I'm still here, but I'm not doing well. That's all they want to know.
Yeah.
But for a small business, what they stand to gain when they're compliant is that there's a document called a tax compliance certificate. And it's given to all businesses that have complied, whether you're a limited company or you're operating under your business name, so you're a sole proprietorship.
Yeah.
This document is issued to the businesses, the business operations that are compliant.
Yeah.
So when you have this document, it enables you to access many benefits in the economy. Like, for example, you can get new business, because there are businesses that do ask for your TCC before they give you business. You can access a bank loan.
Yeah.
You can access government tenders. You can supply to government. And there are institutions that you are able then to work with, because then it shows that you take your taxes seriously. Therefore, if the government can trust you, we can also trust you. Beyond that, there's a peace of mind that comes with complying.
Yeah.
Everyone opens a business to run the business, not to do bookkeeping, accounting, taxation. That's for people like us.
Yeah.
Sorry. But now, for you who has complied, you're free and you're able to now focus on your core business, because you know the tax side, I'm good. When there's a new policy that comes into place, you're able to access the correct information and add it on to whatever you're already compliant with. So that peace of mind, to me, I think is very priceless for a business person.
Yeah. I think I'm sold, and other small and medium enterprises are sold. Because if the motivation is only to be compliant to the tax man, who most business owners are not friends with, there's a bit of friction. But now, coming from what you've explained, it will also benefit you as the business owner, especially if you're seeking to grow. And now you've mentioned something about you're taxed on your profits.
Yeah.
And I feel like now, coming to your accounting side, your CPA side, I feel like the concept of profit is not very clear, especially among the micro entrepreneurs.
Yeah.
You can explain basically, like, briefly, how you come up with the, like, how much profit you've made, given that you can sell, you're making sales, but it's probable you're not making any profits.
Okay.
Yeah.
So even before I go into profits, let me clarify that you're normally taxed on profit made unless you're operating under a tax obligation called turnover tax. So for turnover tax, it's a tax that is charged on sales, but it's only 1.5% unless things change.
Yeah.
So other than the turnover tax, profit for a registered business is taxed on, taxes for a registered business are levied on the profit. Now, distinguishing between profit and sales, when I sell, let me say I sell pens, for example. If I sell pens to you, Martha, then the money you give me is my sales or my revenue. But now there's a cost that I incurred to acquire these pens. Maybe I went and bought them somewhere. So that cost for me purchasing those pens so that I can sell to you is an expense to my business. But now if I take the money that I've sold to you minus that cost, the bottom line is what we call the profit. So profit is basically all your sales for your business minus all the expenses and all the everything you've incurred basically to make that business possible, whatever you're left with.
Yeah. I think that's well explained.
Yeah.
And now you've also touched a part on the accounting side of expenses. I feel like most business owners, when they're like the small business owners, they only account for direct expenses, like maybe the cost of purchasing the stock.
Yeah.
And there are still other many costs that are involved that are left behind. Like, let's say people who sell clothes.
Yeah.
Maybe you purchase a bill worth, let's say, 30,000. Most people will calculate that as the only business expense, but they may end up, of course, paying more taxes due to the other expenses they haven't accounted for.
Yes.
So you can take us through that, like how to identify the different expenses you incur as a business owner.
Okay, I always say that knowledge is power.
Yeah.
And it's something I repeat all the time.
Yeah.
And the reason is because, like, going back to your example of the mtumba seller.
Yeah.
So you get your bill for 30,000 shillings.
Yeah.
And probably you spent 30,000 to acquire it. And the sales that you generate from this bill is, let's say, what? 60,000.
Yeah.
So or let's say 80.
Yeah.
So your profit margin there is 50,000 because you sold 80,000 minus 50,000
minus 30.
Minus 30,000,
Yeah.
you're left with 50,000.
Yeah.
But now, because you don't have knowledge, you're not aware that there are those expenses that actually come in to reduce that profit that you make. Your actual profit is not 50,000.
Yeah.
There's the transport cost that you went into when you were going to collect the bill. Maybe you had some deliveries and you also incurred an extra transport cost. There's airtime that you are using in the communication between you and whoever, wherever. There's the storage cost. Probably you got your bill and you had to hold it somewhere and you had to pay that person to hold it. I've not even mentioned freight cost. Maybe if the bill had to come to you, which is part of transportation cost. There's marketing. Maybe you hired an influencer to say, shop at Martha's Closet or whatever. So all that is marketing cost. Perhaps you are using internet when you're trying to sell this product to your customers. That is a cost to your business. And even if you have a physical shop, the rent over there is a cost to your business. If you've employed someone, that's a cost to your business. So even from a very small level of running a business to a very high one, there are those extra costs that attach to your business. But now the bone of contention comes in with, how do I prove that I spent 100 bob airtime per day for the past 1 month to run my business?
And it was primarily for your business and not your personal use.
And it was primarily for your business and not your personal use. So this is where record keeping comes into play. And I always stress this with business people, because I have seen business people shed tears because you suddenly find out that you owe this amount in taxes, proving that you spent this amount as expenses in your business. There are various ways and various records that you can keep to prove your expenses. And one of them is your bank statements, your e-teams receipts. And this one is very important. When you buy from anyone, if you can, have them give you an e-teams receipt to show that you purchased from them. That's a record that you can raise and say, this is proof that I bought this bill of goods worth 30,000. Now, it's called the Juakali sort of sector. It's very hard to get someone who'll give you an e-teams. In fact, for them, they want their money and they go. But right now, if you're using the Safaricom app, if you pay via M-Pesa, you're able to download an ETR receipt from the Safaricom app. And that can also be proof of payment.
Even when you send money.
But now the thing is, when we start mixing business finances and personal finances, now then those lines get blurry, and that introduces a new problem. Because let's take this as an example, Martha. You use the same account for your business and for your personal. And then at some point, let's say you're getting married and you open a group and people contribute for you for your marriage. Maybe let's say they contribute 400,000 and that hits your account. But this is the same account that you also receive money from your business. And then at some point, KRA audits you and they say that we can see a certain amount of money came in as business sales into your account. And remember that 400,000 has been taken as part of your income.
Your business income.
So you tell me how you will prove that no, this was actually payment for my dowry and my friends actually sent. You'll have to have them sign an affidavit that says I contributed 1,000 for her on this date. Me, I contributed 7,000 and me, I contributed. And that's a lot of work.
And not many people are willing to
and
go
not
to
many
that
people
extent.
want to expose themselves
Yeah,
like that.
yeah.
So that's how you end up paying for taxes that you could have avoided by just separating your business finances
with your
personal finances.
even as simple as maybe having 2 separate lines for your
Even as simple
SIM
as just
card.
having 2 separate lines for your SIM card.
Yeah.
There's the line that you call you use for your biashara, and this one is your personal line. And this for biashara one is the one that's also linked to your pay bills and your tills and your bank accounts.
Yeah.
So everything is just on this side, such that XYZ Limited is this one and Martha is this one. And that's the best way to go about it.
Yeah.
There you've audit proofed yourself.
Yeah.
Yes.
And that's a very important lesson right there, because I feel for most small businesses,
Yeah,
there's that blur between your personal finances
sure.
and your business finances. But now still going back to expenses, the previous guests I've had have insisted highly on the importance of paying yourself as the business owner.
Yes.
You can touch a bit on that and show how that now reflects to your accounting, your business accounting. Yeah.
So first of all, before you even think of paying yourself, you need to first establish separate channels for your business transactions and for your personal transactions.
Yeah.
Now that you've established separate channels, come we talk about paying yourself.
Yeah.
Now we are there.
Yeah.
When you want to pay yourself, you have 2 options as an entrepreneur running a small business. You can choose to pay yourself a salary, which is then a monthly payment that
Fixed.
It can be fixed, or you can define it. You can say it's as percentage of sales. In whichever terms you define it, it's a salary that you pay yourself. Or you can choose to pay yourself a dividend. Now, when it comes to dividends are only paid out annually once, or biannually twice in a year.
Yeah.
So for that one, maybe then that depends on the nature of business that you run. Maybe in your business you only make 5 major sales, like you make 5 sales, each sale is $1 million 5 times a year.
Yeah.
But then if you're involved in the small daily, every now and then income is coming in daily, then in that case I'd much prefer that you take a salary. When you take a monthly salary, there are those obligations that are tied to that. Because you now have to go ahead, if it's above 24,000 that you're paying yourself, you have to register for pay as you earn. And you pay yourself a director's salary or a director's fee. This fee goes through the process just like employed people. You still pay the pay as you earn on it. You pay the SHIF, Social Health Insurance Fund. You pay the NSSF and you pay the AHL, Affordable Housing Levy, and NITA. And I know that it sounds like it's a lot, but I promise it is not that complicated. Especially if you have a professional set you up, and then from that time you're able to run by yourself. It is not that complicated because it's a system. When you establish a system, then you know that from my salary I pay myself 100,000 each month from my business. I know that what hits my account is probably 74,000. So in my head I am prepared. It's 100K, but it's coming down to 74 or 76,000, which makes everything so much easier.
So you're saying if you're paying yourself less than 24,000, there's no need to declare.
You still declare. You declare that 23,900 that you're paying yourself, but the system is, when you're filing for pay as you earn, there's an Excel file that you download. It's called a P10. So the way it's configured, if the amount that you input is below 24,000, it will not calculate a pay as you earn payable. That place will calculate 00. That's the amount that you're meant to pay. But you see, it still captures affordable housing levy. It captures SHIF and NSSF and NITA. NITA is 50 shillings per employee per month. Yes.
Okay. So the other argument will be, now if I start paying myself, to mean I'll be paying tax twice for my salary and for my business profit. I don't know how you approach that.
You won't pay taxes twice because when you're calculating your business profits, you normally subtract your expenses, and your salary is part of your expenses. So the fact that you've removed that salary from the amount that is taxable means that that salary has been taxed once, leaving only the profit that is remaining to shut our salary. So whatever is remaining, that's what is charged the taxes for your business. So it's separated.
Yeah.
It's like if you're employed in a company, whatever you're taxed, the company is not taxed twice on that same money.
Yeah, for sure.
Yeah.
And I feel that is very important even in trying to minimize the amount of tax you pay in a year.
Yeah.
Because if you don't pay yourself a salary and assume that all that money you make minus the other expenses is profit, now you may end up paying a higher tax.
Yes.
Is that the case?
Yes.
Because I also want to understand like the maths. Let's say now for pay as you earn, the rate is usually what's the
so the rate is a range. It goes from 10% to 35%,
depending on your tax bracket.
Yeah, on your tax bracket.
Yeah. And now for the business side, the profits, what's the income? Are they charged like an income tax, or what exactly, like for the small entrepreneurs?
Okay. So for small businesses, you can opt for taxation in two ways.
Yeah.
So you either have turnover tax at 1.5% on your sales, or you have income tax company or income tax individual if you're a sole proprietor.
Yeah.
And that is charged between 25 and 35%. But the common rate in Kenya for residents is 30%.
30%
Yes.
income tax.
Income tax.
Depending, and now for the businesses, now we've established for like when you're paying yourself a salary, you're supposed to pay the tax if you're earning 24,000 and above.
Yes.
What about for businesses? What amount should you be making, let's say, in a month for you to be subjected to the income tax or the turnover tax?
Okay, when it comes to businesses, it's a little different.
Yeah.
So for a business, even if that month you sold 500 bob, and within this 500, the expenses are 200 bob.
Yeah.
So your profit is 300. That 300 is taxable.
Really?
Really.
Wow.
Really. Like the tax, you have to pay your fair share.
Regardless of the amount you make.
Regardless of the amount you make. But now you see compliance in Kenya is very low.
Yeah.
I actually interact with business people every day and they will tell you, mimi silipi na sitawahi lipa na hata itendeke aje silipi.
Yeah.
And you see, it's okay. You see, because tax disclosure, it's compulsory. And you can say you are never going to pay taxes.
Yeah.
And there are people who have actually run their businesses for 50, 60 years and they never paid taxes. And they got away with it. But now you see, you never know when that rod will land at your door.
Yeah.
And the more you're trading with people, the more your business information is out there. The more your business is growing, the more you're giving people your PIN because you want them to pay you, you're giving them your information. And right now we're living in an AI-centric world, a digital world, where KRA systems are advanced and getting more advanced every day. So it's able to cross-check. The system is able to cross-check. This person has reported they bought from you. Have you declared the sales on your side?
Yeah.
So you can run and run, but the KRA is definitely closing in on tax evasion.
Yeah.
Like right now they have e-teams, which is a new development, not so new, fairly new. It's been around for around 4 years, since 2021.
Yeah.
And the e-team system has mandated that for every sale or for every purchase, you have an ETR. An e-teams receipt to support it. Now, enforcing it will take, it's already started, but it's closing in slowly. We will get to a point where we'll be like America, where every payment has to have the taxes supporting attached to them.
So we said when you're declaring your expenses, you have to have proof like the e-teams or the ETR receipts. How do you approach now these vendors? You mentioned that especially in the Juakali sector, most of them won't be willing to give the e-teams receipts. You mentioned something about the getting it from the M-Pesa app. And we brushed it off. Maybe you can just get deeper into that because it's also something that's new to me and I know most people. Yeah.
All right. So when you're paying someone, the rule of thumb in this world today, avoid paying in cash. If you can pay, if you want to pay via M-Pesa. Something that can be trackable, something that is provable. Because if you walk up to me and say, I paid this person 2,000 shillings cash, then it's neither here nor there. But now, when you've now generated you've made your payment on M-Pesa. The Safaricom app has been upgraded in such a way that you're able to generate e-Teams receipts from it. Whether you pay on pay bill, you pay on till, Pochi, direct bank transfer, it's able to cause every payment or every receipt to be an ETR. But that's only on the Safaricom app. And once you've generated you've made the payment and the message for confirmation comes back on the app, there's a tab there that says download ETR. So when you press upon it, it will download the ETR. Which is regardless of,
now you don't even have to ask for the KRA pin of...
No, at that point, you see, that is at the point where the person is not, you're not in a position whereby you can require this person to give you an e-Teams receipt.
Or their KRA pin.
Or their KRA pin. Because that can be proof of a transaction took place. Your bank statements, transactions are proof that those transactions took place. And actually, when KRA is auditing a business, one of the documents that they ask you to present is your bank statement. So always make sure that your bank statements are aligning with what you're declaring. Yes.
Great. And now if they use the bank statements, now I'm going to bring something that is closer home to myself. Let's say people who run businesses and maybe how they earn is through commissions. And let's say the buyer or the consumer pays you directly the full amount, and you're supposed to remit a huge fraction of that to the actual provider of those goods or services. Can KRA now think that whatever amount is landing on your account is your actual income and not the difference between what you're sending out and...
Yeah, they can definitely think that. And that is why now record keeping is very important. You, in turn, when you're paying for the goods that you've just sold, then have it documentable. The same way you've been paid on your bank, pay from your bank. So that the money that is coming in is able to offset the one that is going out. Therefore, the profit there is undeniable.
It's clear. You can clearly show with that.
Anyone can see.
And from our conversation, you have emphasized highly on the importance of record keeping. And now for small entrepreneurs who don't even have the basic accounting knowledge, what are the strategies you can propose they have in place just to make sure they have their books in check?
Okay. So the strategies are quite simple, because I've also interacted with small businesses that all they have in the name of record keeping is a notebook and they're very good. Business people are very good at just recording. Today I sold 4,000 to this guy, 7,000 to this guy, 2,000. Total sold for the day, 18,000. But you see, that's not enough because your handwriting is probably not that good.
Legible,
So, always just transfer all your sales data and your expense data, at least on a digital platform where it can't be lost. It can't, the dog won't eat it and whatnot. So if you can transfer those scribbles and put them on a digital platform, then I can help you come up with that Excel template. That's one. You can download an Excel template from online. ChatGPT is your friend. There are many people offering free Excel templates. And then you're able now to begin tracking your metrics. Put it digitally. That's what I'd always advise, because then you're able to track it in a way that makes sense. It's not one expense is on this page, another one is on this page.
And how often should now one declare? Do businesses operate the same way individuals do? The way as individuals we declare our taxes maybe once per annum, is it the same for businesses, or how often should one declare their taxes and even pay out their taxes?
So different tax obligations have different dates for declaring and different dates for paying. So there's the annual income tax. That one we all know it. It's declared, filed and paid by the 30th of June of the next year. And then we have VAT, TOT, pay as you earn. Those ones are filed and paid within the same, on the same month. Now the next month on the 20th. So they are paid on the 20th day of the following month. And then also withholding tax also lands into that. But now you see, for all these obligations, you have to be registered for these obligations first. For you to start filing and even paying. Because the automatic or the default tax obligation that goes to everyone who has a PIN is income tax. Income tax individual for people and income tax company for registered businesses. But now if you're adding on, maybe you've reached the 5 million threshold, because if your sales reach 5 million and beyond, then the law requires that you register for VAT. So after you've registered for VAT, because you've reached the threshold, then now you begin to file for VAT. If you want to go the turnover tax way instead of the income tax way, you register for it, then now you begin to file the turnover tax.
Yes. Oh, okay. And you've mentioned something that's also new to me. I mentioned before the start of this episode that I'm quite green when it comes to these accounting matters. I was registering one of my businesses on eTIMS, and I saw the option of non-VAT. Like which businesses qualify to be registered under VAT and which ones. You've mentioned about a certain threshold, but you can put out that more clearly. Yeah, the non-VAT and VAT businesses.
So non-VAT just means it's a tax type. It's normally indicated as tax type D. It just means that this person or this business has not registered for the obligation of VAT. You can register for this obligation voluntarily or as a mandatory requirement. It's mandatory for you to register for VAT if you have achieved the threshold of sales of 5 million and above over a period of 12 months. But there are instances where you mostly trade or deal with other businesses that require you to bill them for VAT so that they can claim that as input VAT on their side. In that case, then you voluntarily register for VAT. Yes. So for you, in that case, when you are seeing non-VAT, it just means that you have not registered for VAT. Because if you've not registered for VAT, you have no business creating a receipt for someone and including VAT there. You can't collect VAT because you are not KRA. Yes.
And actually the eTIMS receipt, it doesn't include like if you registered as non-VAT, doesn't include the VAT amount.
It doesn't include the VAT amount.
And you mentioned something in one of your videos that was very striking. The issue of people charging like consumers VAT when they're not paying for the same, like the non-VAT businesses doing that. You can elaborate more on that and reiterate the risks that come with doing that.
So for VAT, let's say you're dealing with a business and this business has requested that in their receipt you include VAT. So if they were meant to pay you 100,000, after you include VAT of 16%, the amount that they pay you now is 116,000. So if you decide to pocket this extra 16,000 that is not due to you, you'll be in a lot of trouble because on their side, they will go and declare that we paid. They'll be like, hi KRA, we paid this 16,000 that belongs to you to so and so. So expect them to also in return give it back to you. But now when you're on your side, you're not declaring that, you're risking a jail term of 3 years or 300,000 as fine. And then there's also you now coming back and paying back that VAT that you took.
In addition to the fines.
In addition to the fines and in addition to the jail term that you're risking. Yes. So that 16,000 can translate into 3 years at maximum prison.
Yes. Just because you
are greedy and you are happy that some extra money
has landed on your
account, which has happened.
Yes. But can't you claim that I actually charged them 116,000 and not
you
the
can't.
100,000 they're
you
claiming?
Can't because in every invoice it has been broken down that this is the amount that is payable. This is the 16% VAT that I've levied on it, bringing it to the total of this. Which is what you want them to pay you.
So even your pro forma invoice has to be
your pro forma invoice and your invoice itself includes all those details. But remember, this happens for those businesses that generate invoices outside of eTIMS. Because if it's on eTIMS, then you can't be able to add a VAT charge if you're not registered for VAT. If you're dealing with a business that has requested you to put VAT in their invoice and you're not registered, just tell them the truth. Just tell them I'm not registered for VAT, therefore that's not possible for me.
That's quite some interesting information, and I feel like most businesses lack this this knowledge, the lack of knowledge can put a lot of businesses in trouble.
Yeah.
I was in a certain forum where Naomi Nganga, the owner of Style by Naomi, was talking about how she had operated her business for a while without being compliant, and then just one day KRA comes knocking on her door, and she ended up coughing a lot of money, probably more than what she may have evaded. So you had mentioned in passing the things that would prompt KRA to come knocking on your door.
Yes.
But you can get deeper into that. Like what can trigger KRA now to come knocking on your door?
Now, you see, like, for example, someone like Naomi, she's very bubbly, she's a public figure, she's an actress, she's a fashionista. So the lifestyle that she leads probably drew KRA to her. And if you lead a lifestyle that is flashy, then you're having luxury vehicles. You're in a yacht. Tomorrow you're in Dubai. The next day, that same attention that you're getting from normal people, you're also drawing KRA. And therefore that can trigger a lifestyle audit to be able to see, okay, this person is purporting to have a lot of money. What do their tax records say? The other thing that can trigger KRA to perform an audit on you is if your bank account or your pay bill is recording a lot of transactions. Money in, money in, money in, money in. But on your taxes side, you're always filing nil, 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 nil. As I do have an issue with nil filers. Because there's a lot that can trace back to the fact that you're doing business. Every time you trade with someone and you give them your information, they're using that information somewhere. And you see, you can't not give them that information because you want their business. So they're paying you. So they want these details from you to pay you. So you have to give them your information. They'll record that they're doing business with you. But on your side, you're filing nil. You're setting yourself up for an audit and you're going to cry premium tears that are not necessary. Yes. So that can trigger an audit to be done on your part. The other thing that can trigger an audit is if you are in the property business. So your records indicate that you're taking meter tokens for water, for electricity, you're buying land. You know, the land registry, KPLC, all these parastatals have a database where all the information can be interlinked. So on the taxes side, crickets, nothing. But on these other fronts, activity like no other.
Very active.
Very active. You're setting yourself up for an audit. Or like people like to say, umebant. So there are various reasons. And the best thing to do is to always get the correct knowledge. And the correct knowledge is found at the KRA. You can access the KRA websites. You can talk to a tax professional like me and many others. But always make sure that you're not living a life that is exposing you to audits. Yes.
While you're not being compliant at
the same time. If you're living in the light, live in the light completely. Do the right thing completely. Or be prepared to bear the consequences.
I think all I'm hearing from you is emphasis on just being compliant.
Just to avoid all this. Just be compliant. And you know, even you yourself on an afternoon, or maybe you've taken a vacation and you're bored. I know this is not something you do, but I do that sometimes. You can just take the Income Tax Act and read it. Just read it.
I'm not sure I will do that.
I know people will not. But you'd find out that there are so many loopholes in the law that enable you to pay minimum taxes. You're afraid of taxes for nothing. It's because of lack of knowledge that people perish. So says the word of God.
For sure.
So you're avoiding taxes because you don't understand. But the moment you involve a tax expert or you speak to KRA themselves, they'll be able to tell you that you can do this, this and that, and it reduces the amount of taxes that you pay. Yes.
Definitely. And also on the issue of non-compliance, maybe most people are feeling to be compliant because they are maybe even undercharging for their services and goods. So would you recommend one to include the tax implication while pricing? Like, you know, since I'm going to incur a 30% income tax, how about I load it on the charge I'm charging you for the service or the goods?
Absolutely. That is a complex question because
Mm-hmm.
I've dealt with this particular issue
Yeah.
with small businesses.
Mm-hmm.
Someone will tell you
Mm-hmm.
where my business is located.
Yeah.
Everyone sells this thing for
Yeah.
50,000,
Mm-hmm.
and everyone is not
Compliant.
Is not compliant.
Yeah.
So if you want to ask me to be compliant and add 16%,
Mm-hmm.
that is 8,000, and
Mm-hmm.
pay and sell this thing for 58,000, no
Mm-hmm.
one will buy from me.
Yeah.
What I say to that is, Martha, you can sell me this couch
Mm-hmm.
for 50,000, or
Yeah.
you can sell it to me for 200,000. It depends on what your target market is. That's one, depending,
Yeah.
of course, I'm being biased, but
Mm-hmm.
depending on the product that you sell.
Yeah.
The second thing is the day that you will be audited.
Mm-hmm.
This is Kenya, and the levels of corruption, unfortunately, are very high.
Yeah.
So you don't know who knows who where.
Yeah.
So you may think all of us are not compliant.
Yeah.
But so and so
Mm-hmm.
knows so and so.
Yeah.
Somewhere.
Yeah.
Sadly,
Yeah.
in our country.
Mm-hmm.
But
Mm-hmm.
the best thing to say to such a person
Mm-hmm.
is make sure
Mm-hmm.
that you're compliant
Mm-hmm.
with whatever is required of you.
Mm.
If it will mean you add value to your product so that you're justifying the extra charge,
Cost, yeah.
then do it.
Mm-hmm.
If it will mean you shift and locate to a different target audience, market,
Yeah.
then do it. Because
Yeah.
also when you elevate your compliance status, you will elevate the value of your brand. Therefore, you elevate even the price that you charge.
Yeah.
And you elevate your kind of customer.
Mm-hmm. Definitely.
Yeah.
Wow. That has sunk in, because especially you've touched that tangent you've taken on you being compliant and your goods or services ending up being more expensive than your competitors. It's a pain point for most businesses that are trying to be compliant, because someone who is not paying tax won't charge the same way you will charge if you're compliant. Yeah,
absolutely.
So that specific insight is so important, because there's always a willing buyer for
every price point.
Provided you can prove the value
in your product. Yes, yeah, 100%.
Yeah, and you also mentioned in one of, I'll be referencing on your videos a lot.
Clearly you're
because
a fan.
I'm a fan. I am fangirling so hard. Yeah, I have binge watched on her TikTok videos. And if you're an entrepreneur, that is something you should do on a random afternoon.
Yes.
The same way you're seeing reading the
Income Tax Act.
Yeah, which that may not be so entertaining. You can probably just go to Fiona's TikTok page and get to see that. So in one of your videos, you mentioned about how KRA can get to, like, they can know about your business and your profitability based on your till number and pay bill. Because I've also had that, like, a conversation going on with some business owners that they don't want to register for a pay bill or till number because there's that notion that now you'll be exposing yourself to the taxman. Yeah, you can touch a bit on that.
Okay.
Yeah.
So Safaricom and KRA shook hands to work together to enable compliance.
Yeah.
Because remember, the tax authority has revenue targets.
Yeah.
And every year these revenue targets go higher and higher, because they're aware that there's a lot of tax evasion and it's a challenge in our country, and they're trying to clamp down on it. So if you're operating a pay bill or a till number, every payment from last year, 2024, every payment that is registered into your till or your pay bill is considered income. It's considered an ETR. It's considered an electronically transmitted receipt.
I didn't even know what's that.
Electronically transmitted receipt.
Yeah.
And thus, you're supposed to declare it when you're filing your annual returns. And this one will catch a lot of people at some point. Because remember, KRA, according to the Tax Act, the Tax Procedures Act, they've been empowered to audit your business up to 5 years back. So right now we're in 2025, but they can audit statements or records from even 2021.
Wow.
So back then in 2021, when you were a small business, quote unquote business, only selling 1 million in a year, but now you're there selling 5 million or 20 million in a year. Now you're being required to pay taxes that you didn't pay for, that have been traced from your records on your M-Pesa statements and bank accounts from 5 years ago. So that's why it's best to always start early, because at the same time, there's someone who will go through 30 years and they'll never do the right thing and they'll never be caught. But how do you know if you're not the one? Yes.
Wow.
Because at some point, the tax evasion story will be minimized and minimized to the most minuscule minimization minimum. And that is where the future is headed. In the entrepreneurship domain. All the big corporations that are doing big business are complying with the tax regulations. What they do is that they call a tax consultant, or they hire a corporation that deals with this kind of thing. And therefore they're able to find all the loopholes that are working out in favor for their business, so that they pay the minimum taxes possible. But taxes cannot be evaded. Especially if you're building a legacy business, a business that you want to run even 10 years to come. Or that you want even your children to find, and your children's children. You can't escape Caesar.
You have to pay Caesar what belongs to him. Wow. And now going back still on that part of expenses, there was I had a conversation where people were arguing that you can use even your personal expenses and account for them as business expenses, as long as you can prove that it's business expenses. Let's say I buy home supplies. I can easily quantify them to be part of what my employees, or I as the business employee, use or require to run the business. Like, let's say I do a shopping, like in the supermarket. Can I keep those receipts from the supermarket and use them to reduce the amount of tax I pay?
I love how creativity is at its peak in this country. And whilst that may, first of all, no. The straight up answer is, first of all, no. Personal expenditure cannot be used to reduce taxes for your business. Now, you've said that maybe in your office you have employees and you drink cocoa. So there's cocoa, there's sugar, bread every day. What else do you buy them?
Tissue.
Okay, that's fine. That's all good and dandy. But now you, every month, you are reducing 50,000 worth of receipts for your home shopping, saying you spent 50,000 to buy tissue, cocoa, and sugar
for your business,
for your 2 employees. And one is a casual. They're not there 3 days a week. You see, even you yourself, how will you explain this if you're audited? You can do it. I mean, you can go ahead and do it. But at some point, if you're called upon to explain these expenses, how will you justify? How much cocoa can one person take, and how much is 1 jar of cocoa?
Definitely.
It's like 350. So how do you take 1 cocoa a day each?
I'm just a cocoa addict.
Then we should see you have diabetes because you've been taking 1 jar of cocoa. It's a beautiful thought, but no.
It wouldn't work.
It wouldn't work out.
And because while we were approaching this conversation, even as I was preparing for the interview, one of the main points I wanted us to touch on, and I know most entrepreneurs are interested in this, are ways of reducing the amount of tax you pay. And that's why I've even introduced the part we were discussing on maybe using part of your personal expenses as that, which you've said outrightly.
No.
That's not possible. You can touch a bit on ways in which people can try to minimize the amount of tax they pay. I know in one of your videos, I said I'm a fan. In one of your videos, you mentioned how you can state that I'm using this home office to run my business. So the rent I'm incurring for that specific office is part of the business expenses. You can touch more on that, and also other ways of minimizing the amount of tax you pay.
All right. So when it comes to minimizing the amount of taxes that you pay, before even going to the details, the main thing, and the thing that should be every entrepreneur's best friend, holy grail, is keeping your expenses records. Because you see, when you're running a small business, it's so easy Maybe you were driving going to see a client,
Yeah.
and then you had a flat tire, you had a puncture on the way,
Yeah.
and you called some people to come and help you, and then you paid them some money. You paid them 500 bob
Each.
Yeah. That one you'll forget.
Yeah.
So it's so easy to bypass expenses as an entrepreneur.
Yeah.
So the holy grail is to create a habit of recording all your expenses and have a system, because when you have a system, it makes it easier.
Yeah.
You can't rely on your memory. The next thing is this. After you've recorded your expenses, there are those allowances within the law that enable you to pay a small amount of taxes.
Yeah.
Like if you're operating a business that has a low amount of expenses, so long as you're not a consultant, maybe management, or someone who offers professional services, this is excluded for them. But turnover tax has been a lifesaver for many businesses.
Because you said it's only 1.5%.
It's only 1.5% as compared to paying 30%. In as much as the 30% is on profit, and the 1.5% is on sales, the difference is huge, especially if your expenses are low. Because you see, if your expenses are many, you're able to reduce your taxable profit. But if your expenses are low, the amount of taxes you're required to pay is so much compared to 1.5% only of your sales. Yes. So that is another way you can reduce the taxes that you're paying.
And before we continue with the ways of reducing, before I forget, who is eligible to apply now to be paying the turnover tax?
So the turnover tax is accessible as an obligation to everyone whose business generates a revenue of between 1 million and 25 million.
So below 1 million, you can't apply for that?
Below 1 million, you can't apply for it. So the goal keeps shifting between the 25 and the 50 million as the upper limit. But if you're operating within this threshold, then you can apply for turnover tax, which is a lot. It's a majority of the small businesses. In a year.
But now the smallest businesses are not accounted for.
The smallest businesses are not accounted for. And you see, for the smallest businesses, then even their expenses are high. So for them, it's only proper for them to go the income tax way. But the moment you hit that
threshold,
that 1 million mark, run. Don't walk. Run to the turnover tax obligation. Yes.
Great. Now we can go back to ways of minimizing.
Now let's go back to ways of minimizing. We've mentioned keeping expenses, because expenses will reduce the amount of taxes that you pay. We've mentioned turnover tax. And then, basing on the industry you're in, there are those tax incentives that the government gives to encourage growth in that industry. Like there are some tax incentives for some tax breaks for people in the research and development industries. There are tax breaks for people in the manufacturing and ICT development spaces. So depending on your industry, you can reach out to a tax consultant, and they'll let you know that basing on your industry, these are the incentives that are available, which is a huge
amount.
It's a huge topic, but it gives you tax breaks. Like and another one is, for example, if you're trading in a special economic zone, it's called an SEZ. Then the taxes that those people pay are different from the taxes other people pay. Or an export processing zone. So there are those zones also that have been marked whereby people pay less taxes. Like, for example, in an SEZ, for the first 10 years your business is operational there, you only pay 10% of taxes on your profits, while other people are paying 30%. For the next 10 years after that, you pay 15%. And then after now, the 20 years is when now you go to the 30%. And you see, that's an entire 20-year break that you've acquired just because you've located your business inside a specific zone. Of course, there are requirements for you to be in such a zone. But then if you qualify with the requirements, then why not? A good example is Tattoo City. It's a special economic zone. Yes.
Oh, wow. So those are some of the ways one can
reduce taxes. Now, let me mention on the example I talked about that mentioned the home office. So, for example, if you have a room in your house and this room is used primarily for your home office. So you have a desk over there and a computer and a chair, and the whole room doesn't have an extra bed over there whereby guests come and they sleep, or you've stored your vicombes there. No.
It's just
This
your
has to be
office.
a specific room that is segregated from the rest of the house, and you use it as your office, or you use it to put your products as a storage for your products for your business. Anything that has only to do with the business. Then the percentage of the square feet of that house compared to the percentage of the entire house can be aggregated into rental space for your office. So if the room is, let's say, it's 20% of the entire house, and you pay 100,000 as rent for the house, maybe you're rich and you actually pay 100,000 as rent. Then that means that 20,000 every month is an expense to your business called rent. Yes.
And you don't have to prove that it's, how will you prove that it's 20% of that?
There's the blueprint of the house, and every house you can approximate the square feet of the house. Even in the blueprint of the house, you can see that in this house every room is X amount of, or you can just measure all width and length of your house, and then width and length of your office, and see.
And this is in a residential property,
this
not
is
a
in a residential
property.
But remember that you're using that space for your commercial business purposes. Yes. There are also those rules that come with KEBS, whereby there are certain businesses that you can't have in residential areas. And there are those audits that come with NEMA and all that. So also you have to factor that into consideration. What I'm talking about is maybe you work online. Or you work as a service, and you have a home office, then that comes into play.
Like maybe you're doing,
but you can't do exactly, but you can't do manufacturing. And you're creating oils for beauty and skincare. And you have your plant in your bedroom. I don't even think KEBS will agree with that.
And now, like for small business owners, micro. Let's say there's a campus girl who is running a thrift store, and they have used a section of their room. Maybe let's say they don't even have a separate room. They maybe live in a studio apartment. They have section that now this part is my home office, where I take pictures of the clothing I'm selling. All that would that still apply? Like maybe
no. That wouldn't apply, because that space as it is already being used for personal use. The person sleeps there. So that can't be.
It has to be a separate room.
It has to be completely separate.
But I feel that is a very important insight you've shared. Because most small entrepreneurs in the current age of digital marketing, most of them run them
work from home
online. They don't have like a physical store. So that is an important aspect. And now there's also still another thing you had mentioned in your videos still on the tax amnesty. Like, because I feel it's also one way of reducing the amount of tax you pay. So you can touch a bit on that, like debunk that jargon.
You're actually not as green as you think you
It's because I've consumed your content.
Okay. So I take credit. Okay, that's fine. So the tax amnesty. An amnesty is a period whereby the tax authority of a land, tax amnesty is a period whereby the tax authority of a land sits and decides, let's reward our taxpayers with a break. So it's a period within which they forgive certain tax obligations. So for the one currently running in Kenya, it's a tax amnesty that is forgiving all tax obligations up to December of 2023. Not all tax obligations. Let me correct myself. Penalties, fines, and interest. So if you had a tax that you were supposed to pay for 15,000, but then you filed it late and you never paid it, so you had a penalty for late filing, let's say of 10,000, and then the interest that accrued on that 15,000 has been growing and growing, and now it's at 35,000. So what you're going to be forgiven for is the 35,000 and the 10,000, the penalties and the interest, but you still have to pay that
the actual
principal tax, the 15,000 for it to work. However, if yours is for late filing on nil returns, then those ones are wiped away. If you have filed nil returns late, then those ones are wiped away. Yes.
Oh, great. And now that you've mentioned that, let's say now someone is watching this video, they have not been compliant since they started running their business, and now they have been motivated by the insights you've shared to start being compliant,
Yeah.
can they now start afresh? Like, let's say any income I earn from now going onwards, I'll be compliant and just forget about whatever happened in the past. And
Get a clean slate.
get a new clean slate.
It
And that
depends.
gets to bite them later.
It depends. If you are a small business and you've been operating for a while, you still yet to file returns for last year, 2024.
Yeah.
2024 is still current as far as the tax season is concerned.
Yeah.
So a good starting point would be to file 2024 the correct way.
Yeah.
Fish out all your records from your M-Pesas and your bank statements and calculate your income.
Yeah.
Fish out all your expenses that you've been incurring.
Yeah.
Now, if you weren't keeping records, you're in trouble.
Yeah.
But if you have a way of tracking maybe and tracing through your records, then come up with your profit and loss statement.
Yeah.
And pay the taxes that you're supposed to pay on it. Especially every sale that you've declared on eTIMS.
Yeah.
So the amount of income that you declare as revenue sales should agree with the sales invoices that you've generated for your customers on eTIMS.
Yeah.
It cannot be lower. The system will immediately detect that.
Yeah.
Because remember, eTIMS transmits receipts in real time to KRA.
Yeah.
So whatever you declare as income for 2024, make sure that you've captured all the sales that you put in your eTIMS. Yes.
Yeah.
So a good starting point will be 2024. But then for all the years back, if you don't have records and maybe you are not even a serious business person, if you remember any income points, then put them and file and pay.
Yeah.
The amnesty will take care of you in regards to penalties and interest.
Yeah. But
if you've not been doing business those past years, then just file nil returns and update your records so that you're able to file for 2024. Yes.
Wow. That's very insightful. And now that you mentioned eTIMS, I've remembered something. Let's say I've generated the case I gave you of people who operate by earning maybe commissions. You've generated a receipt to your client based on the total amount they're supposed to pay.
An ETR receipt. An
eTIMS receipt. Yeah. And now the person who is the actual, like the primary service provider, because you're an intermediary basically, generates now a receipt to you of the amount you're paying them, less the commission you're paying. If they do not include your KRA PIN while generating that receipt, will it still, and maybe you happen maybe to lose that that receipt, how will you account for it maybe as not your income later?
Okay, so this person, you are paid as a broker.
Yeah.
And there's a portion of this money that you also pay.
Yeah, let's say 80%.
The supplier, the main supplier.
Yeah.
You see, your records can show that you also remitted to this supplier.
Like your bank statements.
Your bank statements, your pay bills or your M-Pesa statements, because probably they have a pay bill or something.
Yeah.
The fact that this is provable, that you paid, in return, paid this amount to them.
Yeah.
But when you paid it to them, did you yourself generate a receipt?
On eTIMS or?
On eTIMS.
Or you're supposed to
because you see, this person, let's use an example of an Airbnb, right?
Yeah, yeah.
So you are marketing Airbnbs and you've gotten a client and you've connected them to the owner, the host.
Yeah.
So the host, you pay the host, but the client pays you.
Yeah.
So the difference there is whatever is the amount that you're required to declare as your income.
Yeah.
For them, the amount that they declare as their income is whatever you paid them.
Yeah.
So there's a lapse there whereby the invoices cancel each other off.
Yeah.
Because everyone is receiving just money just once.
Yeah.
Yes.
Because now if they don't, I'm saying, let's say, I've generated, let's say a client is paying 100,000. I generate an eTIMS receipt of 100,000
to them,
to the client. And now I'm expecting now the host to generate an eTIMS receipt of, let's say, 80,000. if they don't generate that, or if they generate that but don't input my KRA pin, and I happen to lose.
So now for you on your side, you should generate a purchase invoice that you purchased this from the client. You see, it's like a product that you're buying to sell.
Yeah.
So you purchased this thing at 80,000 from them, and you sold it for 100,000. And your eTeams is able to generate purchase invoices and sales invoices. So they will net off. Those two records will net off. Yes.
So you can
the
even
income to you will be the 20,000 minus any expenses also that you've incurred.
Wow, that makes a lot of sense, and also shows a huge gap I have, and I know most entrepreneurs have.
They are as green as grass.
As they sit.
Yes, as green as this.
Yeah. But it's a lot of information we need to learn, even the basic accounting, because even from what you're talking, I can still see without the basic accounting, there will still be gaps. Yeah.
So what you normally do is that you get a professional to set you up. To set up your systems and to tell you, from now on, be doing this like this and like this and like this. Then you can run with it throughout the year.
Without having the accountant in-house.
If your operations are, without having the accountant in-house, especially if you have a low level of operations or you're a small business man, a small or medium business owner, you don't need the accountant in-house. So long as they set up the systems, and these systems can even be a spreadsheet, an Excel sheet. Just record your expenses here, then they set up for you where you will be filing your purchases, documents, and your sales receipts, physically and digitally, both, so that you have backlog for over 5 years. And then after that, you run with it towards the end of the year before you file your return, so that you don't do the wrong thing. Call them again. Just have them confirm and see that this is correct, we can go ahead and file this. So what they're doing is auditing.
After every financial
annual period. Now, of course, I'm also just saying this, basing it on the pretext that probably you're a small business owner. But the more your business grows, especially if you're involved in many transactions, many purchases, many sales, then probably you need someone who will be checking out your books monthly, even if it's not in-house. Then you need to have an accountant that just comes and does your books and makes sure everything is in order, because having a backlog for many tiny transactions over a year,
it can be a lot.
It can be hectic.
And I know this is a service.
And impossible.
And I know this is a service that most small and medium entrepreneurs will be interested in. So would you give a range of how much it will cost for a small entrepreneur to be set up? You've said it can be as simple as a spreadsheet. What would be the range of how much they will have to incur to be set up for such?
For that one, they have to call me, we discuss. You see, if I say it's this amount of money, then they will,
a blanket figure,
then they will come, and maybe their situation is a little bit more complex. Maybe they're dealing in importing goods, and then now there's that angle that is not factored into whatever I'll say. So the amounts can vary, but it's nothing impossible. It's nothing impossible. Don't be afraid that you're too afraid to ask.
They can,
and then you risk non-compliance,
which will cost higher.
Now, Heritu, you would have asked.
Definitely. We've delved quite a lot in the tax issues, and at least now we are not as green as we started. Because now we are yellowish.
Kind of yellow.
We're kind of yellow. But this is a conversation that needs to keep happening to just enlighten the entrepreneurs and all. And not just moving a bit on the accounting side. Still, in one of your videos, you mentioned how businesses, and we actually had this chat before our episode recording, where I was telling you in a previous business, actually in the same business, there was a time you experience a high in 1 month, and you assume that will be the case, the trend, and maybe you get too excited by the one, maybe big deal you get, or one good month. And I saw you mentioning that should, high profit in 1 month, you shouldn't translate it to be a good thing for your business. You can tell us more on that, and how maybe to counter that, or to be well prepared for such.
So profit can be a beautiful lie. Because if in the month of December and November, whereby people have a knack, their money is itching them and they want to spend. And you record such high profits that 1 month. So let's say you record profits of 500,000 profits. So
Yeah.
you've already sold and removed all your expenses, and now you're left with 500,000
as your profit.
Yeah. And then the next month you record, now January, where it's a little high and dry.
Yeah.
You record 80,000 as your profit.
Yeah.
It's a big drop, isn't it?
Yeah.
But what if in February you record 100,000?
Yeah.
So is that a good thing or a bad thing? You can only know if you're maintaining data over time. So now then it's important for you to compare, because you see that 500,000 profit in December may be may not be a good thing, because maybe December of the other year we made 2 million as profit.
So it's a drop.
So it's actually a drop. You're happy, but it's a drop. Maybe that 80,000 profit in January is actually a good thing, because January of last year we recorded 20,000 as profit. So it's actually a growth curve. So this brings in the comparative angle of bookkeeping or of accounting, whereby you compare apples with apples and bananas with bananas. If it's December, take December of 2023, 2024 and 2025. Look at your trend. If you did better in 2023, what did you do right in 2023, and what are you doing wrong in 2025, in 2024? Then now you begin to get data that feeds your decisions. If you've done, if you compare quarters, you see, comparative analysis can be specific month by that specific month. It can also be quarter 1 compared to quarter 2. It can also be quarter 1 this year compared to quarter 1 last year. It can also be sales in a specific region. Maybe you have a Mombasa office compared to sales in the Nairobi office. So this 500,000 profit that you've made, 450,000 of it is from the Nairobi office. So why are you happy?
And
why
the
are you
other one is
smiling?
not.
That other business is being carried by this one business, and you, instead of being happy, you're supposed to put measures into place. But if you cannot see it like that, it's very hard for you to begin to make decisions that move your business forward. And that's why I say that I'm a business growth advocate, because those are the kinds of exercises that I do with entrepreneurs. But it can only work if you keep records for your business. Records is everything, and I've said this probably 100 times even in this city. Records is everything if you're running a business.
Wow. And that is so important, what you've just mentioned. We've talked about a lot about tax compliance, but you've also emphasized highly on the importance of record keeping.
Yes, they go hand in hand.
And even how because you cannot know whether you're growing or not if you don't have the data. Even using the example of corporates, the same way you've shown the comparative like analysis. They for them to set even budgets, they see how much did we perform last year, the year before that, and what's the projected growth for this year. Wow.
And what are the factors to consider? Is this an election year? Yes. So we probably will suffer at some point. Therefore, our budgets are going to be a little lower. Is there maandamano next month? You see, politics also affects our business. And then now you look at developments in the tech. If you're involved and you use a software that you sell, but now it's outdated and a new one has come up, you definitely know that your sales will suffer unless you upgrade and join the whatever has just been launched. So those are the kinds of decisions that you can only know if you keep your data. Because now this data helps us to know where to focus our attention towards. Yes.
Wow. And now just to shamelessly plug myself.
Yes.
When we're talking about ways of minimizing the amount of tax we pay, there's an untold story of something that is not so clear to the public.
Yes.
How they can even reduce the amount of tax they pay through having like life insurance covers. They usually give like a tax relief. If you have a life insurance cover, you should check with your, maybe the person who sold you or your insurance company. There's a certain percentage, and you can use that to reduce the amount of tax you pay by declaring yourself, because it's an incentive by the government to make sure there's an increase in insurance penetration in the country, and just to safeguard the population. So a percentage of your taxable, of your actual tax, you're given a relief of that, but it's capped to a certain amount to make sure that you're not actually paying any taxes, because you still have to be compliant and all. Yeah, so that is something people can look into.
Yeah, the same applies to mortgage.
Oh.
If you have mortgage, because the government wants to encourage home ownership.
Yeah.
So if you take out don't take out a loan if you want to build a house, take out a mortgage. Because then 15% of your interest payments can be offset on your taxable income if you're employed.
Yeah.
Yeah.
Wow. Those are tips that people can use.
Yeah.
And actually now if you want to purchase life insurance, any kind of insurance actually, you can get to contact me. I'll leave the details in the description box. And you can save yourself some tax in addition to being hedged against the risks that come with all that.
Yes.
I feel like we have covered quite a lot, but this conversation can go on and on and on. So right now I would want you to give just like your closing remarks and some of the insights you feel like every small entrepreneur should know. Yeah.
Okay. Every small entrepreneur needs to know that compliance is not a suggestion. Tax compliance is not a wish. It's mandatory. And if you're building a serious business, I'm not talking about a hustle here or a hobby, then compliance should be at the top of your needs as a business so that you can focus your core attention on growing your business.
Yeah.
A good place to start is to make sure that you're paying your taxes on time. Start from somewhere. If you've never paid taxes before, which is a problem that we're dealing with many entrepreneurs, you will feel a very huge burden lifted off your shoulders. If for the first time this year, you start from somewhere and you pay a certain amount as taxes.
Yeah.
If you've not onboarded on eTeams, it is a must for every business to be on eTeams.
Yeah.
eTeams is a free platform that enables you to to regulate your records for sales, purchases, and even stock if you sell goods. And finally, instead of making a mistake of filing nil returns and you're not sure that you're supposed to file nil returns because you've been doing business, why don't you get a tax expert to be able to give you that assurance? Why don't you contact me and have me help you to set yourself up so that you're not setting yourself up for future problems with the regulatory authority. Because prevention is better than
cure.
Thank you.
Wow. I think that has summarized everything in such a perfect way. And I think anyone listening to this conversation or anyone who has interacted with the content you share on the socials, especially TikTok, I don't know how much I can emphasize on this. If you don't have anywhere to binge watch, just go search Fiona Witaba on TikTok, binge watch all that content. You get to learn so much from her. And I feel like you come off as an expert to me, and it's something I mentioned before our podcast recording. And for any business owner that's looking to source for your services, you can tell us how we can get to reach you and some of the services you offer and all that.
All right. So if there's a business owner out there who wants to be compliant finally and do things the right way and set up their accounting and their bookkeeping systems, then you can reach me on 0117 333 818, or you can send me an email at fionawitaba1@gmail.com. Probably you'll also
I'll pin those as well.
The details. And what was the other question?
How they can reach you and the services you offer.
The services I offer. As a result of the work that I do, which is aligning businesses accounting-wise and tax compliance-wise, businesses are able to focus on their core business because your records are clear, your data, financial records, you understand where your profit margin is, why is it performing well based on the industry that you're in. Also, the taxation side is taken care of. I have a team of accountants that I work with, and we are able to set you up and make sure that you file your returns monthly and on time so that you can focus on your business. Focus on growing your business. These are the things for accounting, taxation, give them to the people who love that kind of thing.
People who read
the income tax on a
random Friday afternoon.
Yes.
Wow. Thank you so much, Fiona.
Welcome.
This was a much needed conversation. And as I mentioned, even when I was inviting you, you make this information very digestible. This is the kind of information that will have people dozing off
Really,
but you
it's
make it so
true.
interesting.
It's true.
Yeah, you know how to add a sprinkle of humor
Yeah.
in it and make it as layman as possible.
Digestible to a 12-year-old.
Yeah,
Yeah.
because people who have been as green as I am,
Are now yellow.
we are now yellowish. Thank you so
Okay.
much.
You're
And
welcome.
to our viewers and listeners, thank you so much for watching up to this part. I hope and know that you enjoyed this conversation and you got to learn a lot from this. You can tell us in the comment section one thing that you got to learn and that you're willing to apply moving forward. I hope it's compliance, because we are looking to be as compliant as possible. For those listening on to us through Spotify and Apple Podcasts, I hope you enjoyed listening to that. You can also leave your comments and make sure to follow. And those watching on YouTube, make sure to subscribe and like the video so that it can be distributed to a wider audience who are in need of such information. And until next time, bye bye.